Yindu had directed $79.9 million to Ebang via accounts linked to Yindu's CFO's wife, according to Chinese media. The funds were alleged to have been used to inflate Ebang's sales ahead of its IPO. Yindu investors, looking to recover their investments, went to Ebang headquarters in Hangzhou to demand that Ebang return the money owed to them. As photographed, Chinese protesters demonstrating against Ebang's involvement in alleged peer-to-peer lending Ponzi scheme. The signs read, Ebang launders money. Source, Denicia.com. Ebang subsequently stated that Kui Hongwei was a customer and claimed that the 520 million renminbi or 79.9 million US dollars was payment for its products mining rigs, and B, it had returned 380 million renminbi or 58.4 million US dollars of the initial payment, and C, that it would not return the remaining part, 140 million renminbi or 21.5 million US dollars, because the products have been delivered. Yindu investors asked Hong Kong regulators to refuse Ebang's listing application due to the alleged embezzlement. Yindu's investors were angered to see Ebang's subsequent attempt at going public in Hong Kong. Below is an October 12, 2018 screenshot from a letter sent to the listing department of the Hong Kong Exchange asking authorities not to accept Ebang's listing application. The letter is titled, Application to Request the Hong Kong Stock Exchange Deny Ebang's IPO Application. It states that there is evidence that capital used in Ebang's transactions or investment activities were provided from Yindu, a beneficiary of alleged fundraising. Around 3 months later, Ebang's Hong Kong IPO listing lapsed for the first time. Ebang reapplied in December 2018, but its application suffered a similar fate to its first, lapsing again. Part 2. Ebang then took to the US, where it IPO'd through an underwriter accused of fraud by one of its largest investors. Its IPO proceeds have since vanished. Shunned from Hong Kong, Ebang sets its sights on US markets and raised $91.7 million through a June 2020 IPO. Ebang was finally able to raise funds through a US IPO in June 2020, then immediately diverted the IPO proceeds outside of the company in a series of highly irregular transactions. Many of the transactions can be tied to the Hong Kong-based underwriter who led Ebang's IPO, named AMTD. As we show, AMTD has faced a history of fraud and self-dealing allegations, including from one of China's largest private equity firms, as well as a track record of US IPO flops. Ebang represented in its IPO prospectus that the vast majority of the proceeds would go into expanding its business, and that any loans made with the proceeds of the offering would only go to its subsidiaries. On June 26, 2020, Ebang went public in the US by listing on NASDAQ. The company raised net proceeds of $91.7 million. Page 5. In Ebang's IPO prospectus, it told investors that 70% of the newly raised capital would be used for purposes related to expanding its business, development and introduction of new mining machines, corporate branding and marketing. The rest was to be allocated to general corporate purposes. Page 59. Quote, the primary purposes of this offering are to create a public market for our Class A ordinary shares for the benefit of all shareholders, retain talented employees by providing them with equity incentives, and obtain additional capital. We plan to use the net proceeds of the following as follows. Approximately 35% or $34.1 million for expansion of overseas business and new businesses, including establishing research and development centers and taking, selling, and marketing initiatives overseas. Approximately 20% or 19.5 million US dollars for our development and introduction of new mining machines. Approximately 15% or 15 or 14.6 million US dollars for corporate branding and marketing activities, and the remainder of the net proceeds for general corporate purposes, which may include working capital needs and other corporate uses. End quote. Further, Ebang promised that any loan proceeds would only be used to make loans or capital contributions to its PRC or China subsidiaries, page 859. As an offshore holding company under PRC laws and regulations, we are only permitted to use the net proceeds of this offering to provide loans or make capital contributions to our PRC subsidiaries. Despite these claims, Ebang promptly diverted $103 million, all of its newly raised IPO cash and then some, into bonds linked to its underwriter AMTD, rather than following through its representations to investors. Ebang used its IPO funds to purchase long-term bonds tied to its underwriter AMTD in a series of highly irregular transactions. Less than a week after Ebang's June 2020 IPO, it loaned $40 million directly to the controlling shareholder of AMTD, LR Capital Property Investment. Days later, it began directing what would amount to $63.6 million into two bond purchases from a Cayman-based entity linked to AMTD called International Merchants Holdings. The original $40 million bond was redeemed as of an undisclosed date, while the other $63.6 million seems to remain outstanding. Based on the company's less available balance sheet, the sum would represent its single balance sheet asset, page 74. Note that the bonds have maturities ranging from 2023 to 2025, which could tie the capital up for years at interest rates ranging from only 4.0% to 6.8%. In other words, rather than using the capital to expand its business, as originally claimed, Ebang has apparently tied it up in low-yielding, long-term bonds backed by an opaque Cayman-based issuer. Ebang's underwriter, AMD, has a history of allegations of fraud, self-dealing, and IPO flops. We think the surprise use of funds bodes poorly for Ebang's investors, given AMTD's history as a counterparty. For example, AMTD and its chairman, Calvin Choi, have recently been accused of multiple forms of financial fraud by one of the largest private equity firms in China. An article from October 2020 in Nikkei details some of the accusations. In the article, major Chinese private equity firm CMIG, which invested with AMTD, explained how its money essentially disappeared. According to one senior executive quoted in the article, and I quote, "Some projects made money, but he didn't give us the profits. Some had losses, but we don't know whether he truly invested or misappropriated the money." End quote. They vowed to send Choi to jail if he didn't return their funds. According to media outlet Caxing Global, CMIG hung banners of AMTD chairman Calvin Choi in Hong Kong, accusing him and his father of fraud. In the months leading up to Ebang's suspicious bond purchases, the banner reads, "Financial fraud, Calvin Choi. father and son, worked together to steal a massive amount of capital from stock investors. Ironclad evidence shows Calvin Choi scammed my money. Investors lost everything. US listed HKIB, Singapore listed HKB. Stock fraud. Please confess to Securities and Futures Commission and Independent Commission Against Corruption. End quote. The following of these allegations, Choi put out in a bizarre, meandering statement. I quote, I have encountered many things that have been questioned and incomprehensible by the outside world. What is more, there are those who envy and jealous, said in quote, and those who are cold-eyed and mockers and malicious. There are slanderers, end quote. AMTD has done this before. Another company it took public in 2020 directed IPO proceeds back to them. That company is down 70%, has seen 6 board members and its co-founder resign, and saw its auditor decline to stand for re-election. China-based Molecular Data, or MolBase, listed on Nasdaq in January 2020. AMTD led the $70 million IPO. In similar fashion to Ebang, MolBase directed $58.4 to AMTD's parent, LR Capital, when it received its IPO proceeds, page 131. To quote, we have invested our net proceeds in wealth management products. On January 6, 2020, we purchased a $58.4 million note issued by a third party, LR Capital Property Investment Limited. The note matures in December 2023 and bears interest at 6% per annum on an annual and non-compounded basis, payable in full at the maturity date. The note may be redeemed in part or in full at the request of us. End quote. MolBase exhibited major issues of its own. The company has seen 6 board resignations, pages 1, 2, 3, 4, 5, and 6, and its co-founder resigned. It was late on its 20-F, and its auditor declined to stand for re-election. And 5 is MolBase is down almost 70% since its IPO.